Hello, and welcome to Center Theater Group's Working in Theater virtual modules. My name is Christine.
And I'm LJ.
And though the theaters have gone dark, CTG has strived to continue to offer meaningful virtual conversations about making a life in the arts. These conversations have not only been extremely valuable, but accessible to people all over the country.
As we look ahead to reopening, we wanted to make sure that these wonderful conversations live on and continue to be a helpful resource for emerging theater artists, arts administrators, and theater educators.
There is so much amazing information in these videos, and we are here to help guide you through them.
Well, thanks for tuning in. Hello, and welcome to the taxes portion of our financial literacy module.
Taxes are complicated for everyone. And as artists, we have to know how tax laws affect us and how new legislation will affect our taxes.
We hope this video will provide information that will help you further research what's best for you and your unique situation.
That's right. In our first clip, theater maker Diana YN joins actor and tax professional Richard Azurdia, and they respond to a question about how to claim donations as an independent artist or small organization.
So we're going to go through the budget template here in a few minutes, but I just want to get through a few more questions from the comments. Not sure if this has been covered already, but what are the legalities of accepting donations as a new company or as an independent artist? Do the donations need to be claimed as income? I am not a tax professional, and so I will not offer any advice on this topic.
Richard, do you want to take this?
Yeah. Sure. Yeah, I'll jump in this one. So we talked about fiscal sponsors. That's one way. Like say for example, you're starting out a new company, but you're not a nonprofit, and so then you work with a nonprofit so they can funnel that money to you, so you don't have to worry about, like, oh, I'm gonna have to claim all this money that's coming in. You have an organization that's helping you to get through that process. Now if you're just small, you're starting out, you're completely independent. Unfortunately, you will have to claim that because that's income that's coming to your pocket. The good thing is it's also income that's going to be spread out through everywhere in the production. You're paying artists, you're paying this, you're paying the rent, you're paying props, costumes. So it's also an expense. So in reality, you can assume you're not going to be making that money back. So it would be considered a loss, so it won't really hurt your taxes as much as long as you keep track of all your expenses and how much you're paying everyone or how much you're paying for the production itself. So that's very important, keeping track of everything, but you definitely have to claim it on your taxes, unfortunately. Any money that comes in, through donations, it's all basically income for your project and your production.
Yeah, I want to add that, yes, to everything Richard just shared. And I want to add that I think it's really important that we're very clear when asking for money. Like a donation is often seen as something that, you're giving to a 501c3 or another kind of charitable organization that you can get a tax write-off. And so as an individual artist without a fiscal receiver, I cannot give them that tax write-off. So if people do want to make a gift, to my production, that becomes either they're an investor or they just believe in my work and are okay with not getting something not getting that charitable tax write-off, which is why so many people get fiscal sponsorship or they do become a nonprofit at a certain point. Like, again, Laban and I started an LLC, not a nonprofit, and there were reasons for that. So you kind of want to figure out what's going to work best to you and just make sure that you're very clear legally on what you're accepting and what the other person is receiving in return.
Yes, I actually think I have a couple of tax-related questions. I think that might be a good segue for that. I was just wondering about quarterly taxes. Like, is that something as a person who is typically paid 1099? Should I be paying my taxes quarterly? Is that what I should be doing?
It depends on how much money you're making. That's what it comes down to. And also it depends on how much money you expect to make that year. because, as an independent contractor, sometimes you don't know how much, you don't know who you're going to work for. You don't know how much money you're going to be making for the year. It's not like on payroll where if you have a consistent job, okay, I'm making 30 grand a year. I'm making 40 grand a year. As an independent contractor, you might make 5,000 in 1 year. You might make 50,000 in 1 year, so it really is something that you kind of got to gauge as the year is coming along. If all of a sudden, you're at the beginning of the year, you only make $500, but then by February or March, you get a bigger job, and then that leads to another job that you're possibly going to get, then you can start assuming that you're probably going to be owing a lot of money to the IRS. So that's, like you all of a sudden, in the middle of the year, you get a big job, and they're going to pay me 20,000, and I already did another job that paid me $10,000, and you're like in the middle of the year, let's say June or July, then it's a good way to start jumping into the quarter, where you can actually start paying in. Because what will happen is by the end of the year, when you start doing your taxes, you're going to owe a lot. You're going to owe a big chunk from that amount. You're going to owe a big chunk. So if you're halfway through the year and you're looking at a big amount of income coming in, then you want to start that process immediately so you can start paying into it. So when you do your taxes, you either already paid most of the amount, or you paid all of the amount, or at least a little bit of it, so you don't get hit immediately when you do your taxes. Because then, when you do your taxes, oh my God, I owe $8,000. I could have just paid already some of that off. And that's one thing that many people forget too. They see the money coming in, but they don't think about the IRS. They don't think, oh, I'm going to be owing money. So the best percentage to save is always 35%. I always tell people 35%. 25 is good. 50 is too much, but 35% is a good amount to save. Whether you might use it or not, doesn't matter. Just keep it there just in case, because you never know. You never know. And of course, after expenses and everything, that amount that you might be owing will reduce. So it might be at the end of the year, it might be a great thing for you. Like, oh, I didn't end up owing 8,000. I only ended up owing 2,000. And I already paid a quarterly amount of. Let's say if you overpay, then pretty much you'll just get a refund from that, And if you underpay, you'll just owe whatever you still owe, whatever's left over. So it just really depends on how much money is coming into your pocket.
I think it's also like what is your comfort level with money? When the government is going to get their money, when do you want to give it to them? I know when I had a full-time job, in addition to working as a freelancer, that full-time job, I took the highest, I gave them the most amount of money possible. And then I didn't do any quarterly payments because I figured that $1,000 that I made was probably going to be offset by expenses anyways. And so I kind of knew that at the end of the year, I would either even out or I would get money back. But that was my particular circumstance. And I also liked knowing that I was terrified to owe $8,000 at the end of the year. That means so I know that's what but other people want to do the other, keep it in the bank so they know if something goes wrong in their life, they've got that pocket of money to pull from. But eventually, the IRS is going to receive what's owed to them. And I'm of the standpoint, that's good. We all benefit from the work that, it's a really thorny time to talk about the government. And a lot of our money is not going to places that I would love, but it is also going to fund schools and to public programs, to Medicare, all these things that I do want to see be funded. And I'm happy to pay my taxes into those things.
I just had to ask because I know that a lot of our participants today are emerging artists and early career artists. And I just know that when I made the leap from having a full-time job to being a full-time freelancer and now a small business owner, tax time was really stressful and overwhelming and scary because the amount of money that I was owing, I was like, man, I got to get on a payment plan. So then I was thinking to myself that just doing a quarterly taxes might help alleviate some of that tax time stress for me. So yeah, that's why I wanted to ask. So let's get so many things to consider as an artist. But we are so excited to have Richard with us today to ask a few follow-up questions because we are not tax professionals and we highly recommend that you seek out the advice of a tax professional like we did today. So thank you so much for joining us, Richard.
Thank you for having me back. I'm excited.
We are too. Richard, there was so much knowledge that you and Diana dropped on us in that video. And I'm wondering, just as, let's say I'm right out of school and I'm just starting to book jobs, would you explain to me what's the difference between a W-2 and a 1099? Let's start at the basics.
So W-2, when you get a job, you fill out two different kind of forms. You fill out either a W-4 or a W-9. Now, the W-4 is basically a form that you fill out when you're officially hired as an employee. So when you're hired as an employee, basically you're getting taxes taken out for the state and federal. You also have Social Security taken out. You have Medicare, disability, and that basically means that you are officially an employee. You have a full-time job. Um, Now, 1099s is a little different. 1099s, you're considered an independent contractor, or you could have your own business. You could be self-employed. It all pretty much it's the same thing according to the IRS. When you are getting paid, when you get hired, technically you're not an employee, but you're getting hired to do a specific job for a company, organization, or an individual. So you're basically fully independent. You have to pay your own. You have to pay your own Social Security, Medicare, and that all you take care of when you do your taxes. When you file your taxes, all that is taken care of. So those are the two differences. You're either an employee or you're an independent contractor.
So when they're talking about owing a lot of money at the end of the year, that's a problem for folks working with a lot of 1099s, right?
Exactly.
Okay. So I know that LJ mentioned
it depends. It depends. Well, it also depends how you fill out your W-4 form when you get a payroll job.
Mm-hmm.
I know some people, unfortunately, I've seen this where they file exempt from getting taxes taken out. So then they end up owing those taxes. So you want to make sure your taxes are taken out. But yes, to answer your question, yes. When you are an independent contractor, you're not paying any taxes. So you have to be ready to pay taxes when you file them.
I see. And Diana mentioned that if you're working on a W-4, you can ask them to take out even more taxes. How would I do that if I wanted to do that?
It's actually on the W-4 form. Now, this is a little tricky because when you first fill out a W-4 form and you get a job, you get an official job, you can let them take out, the correct amount of taxes, or the company will be in charge of that. But if you want more taxes taken out, you can either add that on the W-4. There's a question on W-4 saying, would you like more taxes taken out? You can add an amount per paycheck. Or if for some reason you decide later in the year, you can always go back to your employer and say, can I refill a new W-4 form so I can, have more taxes taken out? And they should immediately, or you can print one out and just give it to your employer, and then they'll take care of that.
That's amazing. So if I was working on a few 1099s and maybe consistently on a W-4, that would be a way to offset some of that money that I would owe at the end of the year.
It is very important to have taxes taken out on payroll jobs. Mm-hmm. Very important, because especially as artists, we have multiple jobs. We might be on payroll in one place and we might be an independent contractor in another place. So you definitely want taxes taken out because you don't know how much you're going to owe at the end of the year based on your independent contracting jobs.
Yeah.
It might be very little or it might be a lot, but whatever taxes are taken out offsets that amount. And then hopefully with your expenses on your independent contractor jobs, that amount will reduce. And hopefully you'll owe very little or you'll actually look at a refund.
Richard, if I can, you mentioned a moment ago that some people file that they claim no exemptions and so the taxes don't get taken out. Can you talk a little bit more about that? And correct me if I'm wrong, but you're saying like when you get hired at a new job, they give you that form and you have to put 0 or 1. Can you explain a little bit more about what those exemptions are and how we should approach that?
Yes, so there's a difference between exemptions and being exempt from taxes. Being exempt, basically, you're saying do not take out any taxes. I'll take care of it myself. And then there's the exemptions portion, which is basically how many dependents you have, how many people are you're taking care of. Now, I've always told my clients claim 0. Have as much taxes taken out as possible. You want them to take out the maximum because you don't know what the year may come. If you get a big 1099 job here and there, or myself, I obviously have a business, so I want as much taxes taken out so it offsets whatever I might be owing, and hopefully I look at a refund. So 0 is always the best number. Now, if you have one consistent job through the whole year, as an employee, you can get away with claiming one exemption. If you're single, you don't have dependents, you don't have any kids or anything else, you're not taking care of anyone else, you can still get away with claiming one exemption. I know it's a little confusing when you fill out the W-4 form because it'll say add 1 + 1 if you're if it's 2, if it's 3, if it's 4, and it's a little confusing. But you also got to remember, if you actually look at the W-4 form, there's a cutoff page, and that top portion is really for your own records. The bottom part is the one that you actually give to your employer. So they don't even get to see all those numbers. So it's up to you to know those numbers. So I would say claim 0. If you actually have a dependent, you can claim 1. Or if you want less taxes taken out so you get a little bit more on your check, you can go ahead and claim 1 also. Now, I will say the W-4 form this year has changed a bit. This year, the W-4 form for new people that are hiring, what they're doing is they're not asking anymore for exemptions or your dependents. They're asking if you're single or if you have multiple jobs. So either you're single, married, or have multiple jobs. So it's a little trickier. It seems a little trickier, but it's actually easy because you don't actually have to fill out anything. You just put in your information and either write in you're single or you're married. And then the other questions are either for you to take out more taxes. So it all depends on the individual, but the new forms are pretty fairly easier than the old W-4 forms.
Thank you. I have one more question, Richard. LJ mentioned quarterly taxes, and maybe I'm working a lot on 1099s and don't want to wait until the end of the year to find out how much I owe. How would I go about setting up a quarterly tax system?
Well, it's pretty easy to set up a quarterly tax system. Either you can do it with your taxpayer, or you can go to the website, the IRS website. There's a little tab that says Pay. On there, you click on Pay, and it'll take you to the installment forms. And then you just pretty much set up an installment plan with the IRS. Now, if you're thinking, oh, I'm going to make a lot of income this year, you kind of do want to pay quarterly. And I'm talking about, higher income, let's say 10,000 or 15 or 20, anything beyond that, you definitely want to have a quarterly system because that way you can catch up to what you might be owing the following year. So let's say you end up making 50,000 in one year, and you end up owing, $10,000, $12,000. Well, if you had been paying through a quarterly payment plan the prior year, you can reduce that amount. Now, basically, what it works is it's you contact IRS, you let them know how much amount you want to pay. So this is pretty much up to you. You can say, I want to pay every 4 months. I want to pay $200, or I want to pay 500 or 1,000. They're fine with whatever amount you want to pay, as long as you don't pay under that amount. So if you promise to pay 1,000 every 4 months, you have to pay 1,000 every 4 months. You can pay more, but do not pay less because they will penalize you for that because you made a promise to them. And let's say at the end of the year, when you do your taxes, the following year, and you ended up owing $10,000, right? After your deductions, it drops to, let's say, $5,000 that you owe. But if you already paid, 1,000 every 4 months, then basically you paid off 4,000 from that 5,000 you owe. So you only end up owing $1,000 more when you do your taxes instead of owing the full 5,000. Now, if you overpay, and let's say you end up owing 3,000, but you paid 4,000, then you basically have $1,000 refund because you overpaid. Or here's another option: you can take that $1,000 refund and add it on to your next payment plan for the following year if
Mm.
you think you're going to be making a lot of money as an independent contractor that following year.
Oh, wow. That is such great advice.
It's pretty much a rollover system.
I don't think I've ever gotten that advice before. That is so interesting. And I cannot wait to try to explore doing this with my taxes this year. This is also, let me just remind everyone watching that we're giving you a lot of information. Highly recommend bookmarking this page so that you can come back to it and refer back to it whenever you need to, maybe every year around tax season. You give this video a watch. We're going to watch another clip now from the Working in Theater series. This clip features Oscar Camacho and Brent Bruin, and they are going to discuss a few other approaches to preemptively preparing for tax season, including putting some money aside as you enroll in your taxes at the beginning of your job, which Richard just talked about, and I think we'll come back to a moment after this video clip. Annie had a question about taxes, having them taken out immediately from your paycheck or wait, and the pros or the cons. I'll just jump in and say that if you are a freelancer, meaning that you are a 1099 employee, then you have no option. There are no taxes taken out of your check. You're responsible for the taxes on that income. So you don't really get a choice. When you're a part-time employee, when you're a full-time employee, also, there's no really a choice. The taxes are going to come out. You do get to say how much you want taken out, and if you want any additional taken out. Do you all have anything to add on that?
Yeah, you should remember what you're getting paid if you're working at multiple places. For example, if at one gig you're getting paid at $18 an hour, that actually is a different tax bracket than if you're being paid $30 an hour. So you, as the person earning the money, need to know over the course of the year what your end goal is, so that when you're doing lower rated jobs, you can add $50 extra to the tax man. And maybe that's just a savings account that you're sending it to when you get a big tax refund at the end. But you don't want to be caught at the end of the year owing $2,000 because you forgot that you were actually being taxed at $60,000 a year, and you did all of these things that were different rates.
Do you have anything else to add on that, Oscar?
Yeah, as far as acting is concerned, so whenever you book a TV show or a film, you're essentially going into partnership with the studio. So you're not really an employee. You could be paid through like a W-4, but most of the time, if you're working in TV and film, you've probably already incorporated yourself, which means a 1099. And so my suggestion is always to keep strict bookkeeping and have a really good accountant.
Yeah.
Taxes.
And if you're in need of an accountant, last week, Richard was on and he gave us some information about his tax business, and it's in the Padlet. So you can access the Padlet and see that as well. Oh my goodness. And Richard's information is actually linked below this video. So again, if you are in need, you can find him. Richard, Brent mentioned putting some money aside in addition to what is already taken out of your paycheck. And I know we talked about that a little bit before, but can you give us a little bit more advice on that? How to do that? Do you recommend it? And how much?
Well, it all depends. When you're working as an independent contractor, you just never know how much money you're going to make. You get hired, a company or individual hires you for a couple of days. You might get $1,000 within the week, and then for the whole month you're not working. Next month you get hired for another job. So it's up to you to kind of gauge it how your year is looking. If midway through the year you're like, all right, I made about $3,000 as an independent contractor, and I'm still 6 months away from the end of the year. I might be making more. So then you want to start saving money. It's all different for every individual because some people don't work as much as independent contractors. Some people do. And if you're going to be working a lot, under as an independent contractor, you definitely want to start saving money to pay that off. If you're not going to do the quarterly payments, or if you are going to do the quarterly payments, you want to save up for that. But if you decide not to, then you definitely want to save up for when you do your taxes, because you're probably going to be paying a pretty nifty amount. Now, ways of saving it, you can either have an extra bank account for that. You can put some cash aside, somewhere. There's many different ways of saving it. Or some people can get really, really crazy and have Excel sheets and all this, and keeping track of all their amounts and how much they're making and how much they think they might be owing. And compute that amount so you can start saving that amount somewhere. It can be a bank account. It can be many ways of saving it. So it just, as long as you know how much you think you might be owing, then you should be okay. As long as you have that money ready to go. Oscar mentioned, payroll and working with studios or film. That's a tricky matter, because when you get hired by a studio, either whether a commercial or film or TV project, you are hired as an employee. You're technically a temporary employee. Let's say you're a guest star or a co-star. You get hired for the week, for a couple of days. Unless you're a series regular, then of course you're full time. But when you get hired for those smaller jobs, you don't need to be considered an LLC or be incorporated. Now, if you are technically a regular on a TV show and you're full time and you're making, let's say, $150,000 a year or more, in any payroll job, then I would recommend being incorporated. Because when you're incorporated, you're getting paid as an independent contractor. So you're the company, and then your company pays off your agent, pays off your manager, pays off your publicist, and your company also pays you. So basically, you get a reduction in taxes, if that's kind of clear, because your company also is hiring yourself. But of course, that's when we're talking 150, 200,000. When you're making a lot of money, I recommend be incorporated. But if you're only making 30, 40, $50,000 as an actor, which is pretty decent, then you don't need to be incorporated.
Mm.
And Richard, what about if I'm earning, as Brent mentioned, across several tax brackets? Is there anything I need to do if some of the jobs I'm working are paid at, as he said, $18 an hour, and some are paid at $50 an hour?
Now, when you're under payroll, let's say you're hired, you have 2-3 different jobs, and you're working consistently through the year, then you kind of have an idea of how much you're getting paid. Let's say you have 3 different jobs, and each job is paying completely different. One job, for the year you'll be making 10,000. For the other job, you're making 15,000, and for another job, you're making 5,000. So you have 10, 15, 20. So you're making $20,000 in a year with 3 different jobs. As long as you know that you're under a certain tax bracket within your payroll, then you should be okay. Because tax brackets kind of slightly change every year. From 42,000, you start jumping into a different tax bracket. Then you get into the 60s, then you get into the 80s, and you start getting into the 100s. So if you're under payroll, it's pretty easy to track those numbers. Especially if you're going to be hired for the full year. As actors, of course, when you get hired for a job and you only work a week, and then you don't know when another job is going to come along, it's a little harder to keep track of that. Oh, I think I have an Amazon delivery. All right, someone will get that. Anyway, somebody heard. That's what you get when working from home. People knock on the door every few minutes. You're like, oh, Amazon. So anyway, it's up to you to keep track. It's up to you to track of how much money you're going to be making at the end of the year. And unfortunately, I've had clients who have no idea how much money they made. You know, I do their taxes, and they're like, "Wow, I had no idea I made that much money. Where did it all go?" So it's important to know when you get a job, when you book a job, how much money you're going to be making. Because of course there's many expenses involved. Whether it's managers, agents, everything else, you want to keep track of all that.
Wonderful. So we have another short clip with Michael Shepard and Jessica Hansen, and they're going to just talk a little bit about the type of information we need to be on the lookout for as artists, because as we've already discussed, so many of these things affect artists differently because we do have so many different types of jobs and have, so many jobs at a time. So we'll watch another short clip from them, and then we'll bring Richard back and ask him a few more questions.
Sort of the motivation. So in that class, we talk a lot about finances. Taxes seem to be one of the most stressful topics. And in the poll, I saw that popped up a lot. Taxes are hard and stressful for everyone, but so much more stressful for theater artists or artists in general. So I think understanding what's happening when it comes to taxes, today we're hoping to talk a little bit about some of the most recent changes, like AB 5, which is an assembly bill that is about sort of the gig economy. And so I'm a costume designer. So when I get hired by a theater, I will no longer be hired as an independent contractor. I will be hired as an employee. And so how I'm paid and the tax implications are different.
That was so interesting. As Jessica mentioned, it is really important that we stay up to date and knowledgeable on any legislative things that can affect our taxes or any other things that can affect our taxes. We are based in California, and so what she brought up was AB 5, which again is a new law. Richard, can you talk to us a little bit about AB 5 and how it changes things?
So AB 5 is controversial at the moment because it was supposed to affect people that are working for Postmates, Uber, anyone that is pretty much independent contractor and almost working full time without any benefits. So the state or some council people decided to basically say, you know what, they deserve benefits, which is great, but they were not thinking about everyone else who is also working as an independent contractor. Let's say some actors, of course, but mostly designers. We have set designers, light designers, sound designers who get hired, as an independent contractor for a specific job, and they're done, a couple of weeks, they're done, and they move on to the next job. They might be doing multiple jobs. But what AB 5 says is that anybody you bring in and you're going to pay any amount, they need to be an employee. So the problem is that now a small theater company needs to have someone who does taxes for them, basically doing all their payroll, which means that they have to hire people on their payroll. They have to take out taxes, Social Security, Medicare, everything else, which means that costs a lot more money for these small theater companies, which sometimes they don't have that kind of money, and it also affects us designers because sometimes they bring in an assistant designer. So if they bring an assistant designer with them and they also need to get paid, who pays them? Do they become an employee of the theater company also, or do they become an employee of the sound designer or set designer, whoever brings them in? So that's where it gets complicated. And I know AB 5 has made some changes. Recently, they allowed musicians to not be in that category as an employee, pretty much. So musicians can perform anywhere. They get paid as an independent contractor. Let's say they go to a club or they perform at a festival. They don't get paid as an employee. So they get away with that. But we as artists have not been able to pursue that or push that even further. And that will definitely hurt us in the future if AB 5 stays strong.
I thought that, well, and maybe you can help me better understand, but I thought that there were some rules basically in place that allowed for some people to continue to be 1099. For example, if it's temporary or if it's not it's not essential to the business or things like that. Like, or are they really moving towards just everybody has to be an employee?
They originally, when AB5 came out, it was across the board. Everyone and anybody you want to pay to work for you needs to be an employee, because they want everyone to have benefits. They want everyone to be paying taxes. They want everyone to pay into their social security. So that's when the controversy came in, which is why many organizations and certain unions also, especially the musicians union, really push hard to prevent that from happening with their artists, at least. So they don't have to worry about, am I going to get hired now? Are they not going to hire me because the company needs to pay extra to cover all my costs, with IRS and state. So they've made some minor changes in the past few months, but at the moment, people are still kind of fighting. I know the new 1099s that have come out, they're called 1099s NEC, which is non-employee compensation. So they want to make sure that the IRS basically wants to make sure that when you're hired, you're not an employee under this organization hired you. This year, we don't know how AB5 is going to make some changes. So as a tax preparer, I'm pretty much waiting, to inform people, because there's going to be a lot of questions coming up, I'm sure, from a lot of the artists that I work with who are designers.
Yes. Well, if you're based in California and you're looking for more information, we definitely encourage you to go out and do your research. Also, Jessica was kind enough to include some resources along with that video, and we've got them linked down below.
Yes, thank you. And Richard, is there anything else different this year, 2021, for taxes that we should know about?
So this year, IRS has been slowly making changes. This year, probably the biggest change is that IRS has allowed meals and mileage to come back for artists. There is a cap, of course, within how much money you're making for the year, but they've allowed few little things back. You can still do donations, of course. You can still add those things as an expense, but they've allowed mileage at the moment and the meals to come back. Now, if you're working as an independent contractor, you pretty much can include almost all your expenses. I say almost because there's some things that you kind of can't include, although sometimes you try to get away with stuff. But you can almost get away with all your expenses under an independent contractor. But as an employee, basically expenses were completely cut out. So this year, the IRS has made some changes, including for performing artists, where you can include meals and mileage again.
That's so interesting. So, yeah, I hadn't thought about that implication for AB5, because once you're on payroll, your deductions change. Can you make those deductions if you have let's say you have one 1099 job for the whole year? Are you now eligible to make some of those deductions you just described?
Under the 1099, you've always been allowed to do those deductions. So that never changed when you're an independent contractor. But for payroll, if you're working under payroll, as of 2017, everything basically got cut out with the new tax cuts that happened with the last administration. They basically gutted the system, so artists were not able to, include their commission to their agents, to their managers, any other expenses, whether it's union dues, or headshots or anything else. You could not include at all, even meals and mileage. The very few things you still could include were just donations. So the tax cuts were really, really bad, not just for artists, but for other people who have expenses within their jobs. I have a mechanic who has to buy a lot of his own tools for his job, who, he's an employee, but he still has to buy his own uniform, provide his own uniform. He has to provide his own tools. So those are expenses that he can include in his taxes. But unfortunately, with the new tax laws, all that was cut completely, And then when you enter into the higher brackets, let's say you're making, $450,000 a year, then you start getting tax incentives, so they start, your taxes start getting reduced. So it definitely benefited people that have more money, and people that are making less money, kind of, it didn't go well for them. That's what happened with the new tax laws. And luckily, the IRS has slowly been making minor changes here and there. And this year is definitely the mileage and meals that came back, which is it's a good start, at least for us as artists, because we do definitely drive a lot. Last year was a little different, but hopefully things will change. But this year, if you start booking jobs here and there, you start driving back and forth, the meals, that everything that comes out of your pocket, meals too, all that you can definitely include this year.
Mhm. Thank you so much. And I think that we're going to ask a few more specific questions on deductions. But before we do that, we're going to watch one last clip. This clip features David Mack and Nancy Keystone, two of my favorite people. And this is for people who are interested in maybe starting a small arts organization of their own, or maybe a large one. We have various size organizations represented in this video. And so yeah, we're going to watch this one, and then we'll come back and we'll ask Richard a few more questions. So we did have a question from the comments. Someone wants to understand better the tax implications of not being tax exempt. Is there anyone that would like to address that?
I can, because we're not. I'm responsible for paying taxes on this, and so any money that does not go through Fractured Atlas is going to go through me, but ultimately I have to withdraw those funds from Fractured Atlas to use in our projects. And so I am responsible for all of that. And so I file a Schedule C when we do our taxes, and I write off, I have to write off everything that we spent, all of our expenses, and usually our expenses outweigh our income. So we don't usually have to pay taxes. It's basically, it's like money comes in, money goes out, and that's it. But yes, you would be responsible. You personally would be responsible for paying taxes on that money.
So when you had me driving around town with that blow up doll in my car for that one show, did you write that off on your taxes?
The doll?
Yes.
Yeah.
Awesome. Do you have anything to add to that? Do you have anything to add, Dave?
No, Nancy's got it right on point. I'll only say for nonprofits, it's important for people to understand, and it's counterintuitive, but it does say tax exempt, but that does not mean we're exempt from taxes. Nonprofits still pay many different types of taxes. We're still paying sales tax. We actually pay all the taxes except for, as Nancy mentioned, that federal income tax. So if a nonprofit does make more, bring in more revenues than expenses in a given year, normally that difference, there would be a tax on that. But for us as a nonprofit, there is not a tax on that. On the flip side, though, for our expenses, if our expenses exceed our income in the year, you cannot write that off as a business expense in the same way you can for a for-profit company. And we do our taxes every year, and we have to pay someone to do our taxes every year, just like everyone else. So yeah, that's a little bit what's funny about the nonprofit system. But yep, we pay taxes too.
I really appreciated that panel because I have a small arts organization of my own, Maroon Arts and Culture. And after that discussion with Nancy and David, we actually became fiscally sponsored. So if you get a chance, please make sure you go back and watch that whole video. It's in the organizational finance section of this financial literacy module. To start off, Richard, can you tell us what is a Schedule C?
So a Schedule C. Before I even get to that, yes, a blow-up doll can be a deduction. So Nancy was right about adding that on there.
Listen, I'm not
Show,
going to blow up all
you know,
around
it's part,
for Nancy Keystone.
part of the show. It's an expense for the production. So yes. So anyway, getting back to the Schedule C. Schedule C is form in your taxes that is used for independent contractors. Schedule C is, anyone who either owns a business, independent contractor, or you're self-employed. Uh, that's the form you use to fill out your taxes. In one line, you put the amount that you made for the whole year. Say you made 25,000. Boom. And then after that, it's a simple. Well, it's well for I guess I call it simple because I do it all the time. But it's pretty self-explanatory filling out a Schedule C. It tells you, how much you spend in meals, how much you spend in equipment, office supplies, and you pretty much just input all that information in there, and then kind of tally it up, and then eventually it'll tell you how much you owe or how much you might be getting, or if you had losses. If you're starting a new company with a Schedule C, you add $20,000, but let's say you have $30,000 in expenses because you're starting up a new company, and you've made some income, but you have more expenses, then that's considered a loss. So 1099, the 1099 Schedule C, Schedule C is for any 1099 work or pretty much any income that you're earning, because according to the IRS, you have to report all that income. So let's say you did a job, here that was for $400. They don't give you a 1099 because anything under $600, you don't get a 1099. So you have a job that you made $400, and the next month you made 500 with a different job, and someone else hired you for $200. You add that up at the end of the year, and you can include that in a Schedule C. And then, of course, because you are self-employed, you're an independent contractor, you just add on all your expenses on there.
Richard, I have a question about deductions. Let's just start. Let's say you are an artist that is working on a mix of 1099s and W-2s, and it's tax time. What are some things that I can claim as deductions that I might not be aware of?
That's a good question. Some people usually forget. I would say about half of my clientele forgets office supplies. Especially during this past year. You're printing stuff at home. You're spending either on paper. Either internet, if you're paying for internet. That's part of your home business. Internet, of course, being office supplies. People forget that they're paying for the printer, they're paying for paper. Any. Some people sometimes even forget that keeping track of receipts is very important. You can go to the post office, and you're mailing stuff out. Keep track of those receipts, because even going to the post office for your work, that's another thing that people always miss out too. Postage. You go to the post office for any kind of business, for any kind of work, that's also an expense. So you also got to keep your mind open that anything that you're doing for your job, your self-employed job, um, any money that's coming out of your own pocket, you need to include that as an expense. And whether it's $5, or $100, it doesn't matter, because every amount adds up. At the end of the year, you're like, well, I spent $5 here, I spent $5 there. But at the end of the year, you accumulate all that, and you're looking at, $800 that you had in expenses throughout the year on just postage. So you can't ignore those small amounts. Small amounts are probably one of the easiest ones that people just always put aside and say, well, I only spent $10 on that, only spent $5 on that. It is for the business, but it's not a big amount. But let's say you go to the to the post office every once a month, and you spend $20 there. At the end of the year, you spend quite a bit of money. And any expense that you have, you need it include them all. If it's for the business, definitely include.
Thank you so much, Richard. I'm wondering, maybe this is too specific of a question, but if I'm doing professional development workshops and things like that, or traveling for work, does that count as expenses as well?
Yes, yes,
Great.
definitely accounts for expenses. Definitely, anything that comes out of your own pocket. You're developing. Let's say you're working on a play that takes place in Japan, and you want to research the country. You want to fly to Japan, and and all this money is coming out of your own pocket. No one's paying you for it. That's an expense. You're developing something that eventually will get you some money back. At least that's what you hope for. You'll create a project that people will see, and you'll make some income out of it. Whether you do or not, the fact that you have to travel somewhere to do the research, that's considered an expense. And if you have to attend any workshops, just to do more research on a specific subject that you're working on,
Mhm.
that's also an expense. So you got to keep your mind open to everything that pertains to the job you're doing. So if you're working on a specific project on your own, you're not getting paid, but you're going to be creating this project by sometime at the end of the year or the following year, then this is your side job,
Mhm.
Yeah.
basically. So any money that you're putting for this side job that you're spending on, that's an expense for this particular job.
I have a quick follow-up question. So I think a lot of our viewers are probably probably students, like college students, and so they are in school, but they're also developing their own work on the side. Can they still take advantage of these deductions?
They can take advantage of these deductions if they're actually doing taxes. Um, if they're doing taxes, if they're actually working, they can definitely put these deductions in there. But if you're just a student and you're not working, but you're spending money on projects that you're working on as a student, technically you don't have to do taxes. That's just basically money that's coming out of your pocket. That's kind of a loss considered. Um,
Mhm.
and if you try to do your taxes just based on that amount, the IRS won't allow it because there's no record of anything. There's no record that you actually have a business, because you're basically just a student. So unless you actually have a side job, like I did back in the day when I was in college, and I was working at a restaurant, then if I had a project that I was working on the side and spending money on that particular project out of my own pocket, then I could have included that in my taxes.
Mhm.
This is great advice. Thank you so much. Well, let's have one more question and then we'll wrap it up. Richard, tax time is approaching.
Sure.
Um, and if I'm an artist and I'm coming to you to do my taxes, what can I have done by the time we meet so that we are ready to go? What do you need to help your clients?
There are quite a few things that I pretty much all your paperwork. The IRS does not allow any tax preparer to do taxes without any W-2s in front of them. So pay stubs do not work. You have to make sure you have all your W-2s. Very important that you know how many jobs you had in the previous year too, because some people sometimes forget. I'm like, oh yeah, I did that one job for a day and I forgot to. You have to make sure you keep track of all your W-2s. Make sure you have them all. Also, all your 1099s. Make sure you have all your 1099s. It's very important to know how much money you made for the end of the year, which is why you don't want to miss anything out when you go to your tax preparer. You don't want to miss a W-2 or a 1099 because the IRS knows. They'll come after you in a couple months and like, hey, you forgot to include this one thing. So you got to know how much income you made through the whole year so you keep track of that. So when the new year comes along, you know for sure these are all my W-2s and my 1099s. The next thing that's important is keeping track of all your deductions. Now this varies. Some people love to just bring a bunch of receipts, which I don't recommend you do that to your tax preparer because it can be overwhelming. So it's good to itemize all your deductions. Oh yeah, and it can get very overwhelming. Like, oh my god, how many receipts? You know, so you want to keep track of it by having all your numbers ready. You know, this is how much I spent for this, my headshots and headshots for this amount. My manager got this, my agent got this, I paid this much for this particular thing, I paid this much for this particular thing, so you kind of want to separate everything individually. There's certain things that can be combined, let's say printing and postage. If it's small amounts, you can definitely combine all those things. Office supplies, you don't need to be specific on like, well, I bought pens and I bought paper. It can just be general office supplies. That can be one amount. But you definitely want to keep track of all that and bring those numbers to your tax preparer, so the tax preparer has an easier time putting all that stuff together. And if they have to ask you questions specifically, sometimes I see a number and I'm like, this number doesn't make sense for this particular thing. They spend $4,000 on office supplies. Whoa, what was that? So then I got to talk to them and say, can you break this down for me? What exactly did you spend $4,000 on for the office? And they're like, well, I ended up buying a new computer, because I'm an editor, so I needed a system and I needed the hardware. So I'm like, oh, you know what? Then I'm gonna need a breakdown of that. So it's more specific, So it just depends on the kind of job you have. You definitely want to bring all your numbers ready. And of course, if you've been investing in stocks, if you're still paying, student loan interest, you will receive all those forms from those organizations at some point. You will receive the 1098s, you will receive stock forms. So as long as you know that you've done all that the previous year, then you should know to bring all that paperwork to your tax preparer the following year.
Mm.
Thank you so much, Richard, for being here today and dropping so much wisdom on us. I feel like I learned a lot, and I've been doing taxes for a long time now. And I hope that our viewers at home have learned something new as well. If you want to hire Richard, again, we will include his information in our resources section. Richard, thank you so much. If you're interested in learning more about financial literacy as an artist, you can check out the rest of the module. And thank you so much for joining.